And so when you look at this, it's like, okay, well, which ones do I pick? How much should I have? Well, that always boils down to your specific goals, needs, and wants, and how much risk that you're willing to take. But if I would take a look at most of your portfolios, you're either heavily weighted in stocks or maybe you're heavily weighted in bonds, and you don't really have a rhyme or reason why that you own each of them. So when you get into the asset classes, ways to invest is that you could have individual stocks per se. Individual stocks is a way to go, but you might be taking on a lot of risk there.
Yeah,
or you could go into...
Yeah, you're taking on company risk there. Retail mutual funds would be the next way to go, and we believe that's better because now you're more diversified, but there tends to be a problem there. A lot of retail mutual funds are very expensive. They have a lot of high internal costs. Some even have load fees to get in the first place. Index funds and ETFs are definitely a better choice. You're still very well diversified, and they tend to be very low cost. And then there's even a category that you probably haven't even heard of. That's called evidence-based institutional funds. This would be using a fund company like Dimensional Fund Advisors, for example. You have to use it through an advisor, but these can be even better investments than index funds for a number of reasons, which we don't have time to get into the show. But suffice to say, if you're an index fund, ETF, or institutional type fund, you're going to be a lot lower cost, you're going to be a lot happier with your rate of return over time.